Ladies and gentlemen, it's always great to be back at the forum, especially this year, as it's a more exciting year with more issues and drama. Like Tun Mahathir, sometimes I feel lonely, as I've been a lone voice in saying that the property prices won't be going down last year and that the office market was still a good market. Unfortunately for me, I'm not like James Bond, who's got a bevy of women, or Tun Mahathir, who's got Siti Nurhaliza's support. But lonely lah sometimes. Anyway, let's start my paper this year by giving an overview of the market last year leading to early this year. I mentioned last year there'll be a slowdown of transactions and marginal increase in property volumes for 2014. And yes, the property sector grew at a lower rate of 0.8% in market volume and 7% increase in market value year on year. This was backed by a strong GDP growth in 2014, good liquidity in the market, and solid employment numbers. Just to give you some numbers, there were 384,000 property transactions last year. It was a total of 163 billion ringgit worth of properties transacted, with the residential property being at about 65% of the total transactions. Selangor and Johor were the highest transactions, Selangor at 25% of total transactions in Malaysia, and Johor at 16%. There was an overall increase in residential transactions, and retail and office market performing slightly better. Now, in this slide, we can see some interesting trends, and the most interesting being the impact of the responsible lending guideline in 2013 in KL and Penang. As you can see, in 2013, primary market transactions in Kuala Lumpur was only at about 520 transactions in the primary market, and in Penang at about 684 transactions. Now, this followed a quick rebound in 2014, even though the cooling measures were introduced then, as people got a grip with the responsible lending guidelines and more property were launched. The cooling off measures in 2014 muted the demand a fair bit, but did not stop property values from increasing marginally. Also interesting to point out that though volume of residential properties dropped in Selangor and KL, so the amount of transactions of residential property actually dropped in KL and Selangor, but the total values increased. Now this indicates a higher capital growth in these two locations, and also that scarcity is actually setting in preferred locations. Penang and Johor reported increase in volume and value, stable demand throughout the years, indicating strong economic growth and high migration into these two states. Now, KL was a stable market. I think business went on as normal. The residential market did see a drop in volume of transaction, but very, very strong increase in value. Again, as I mentioned, indicating scarcity and good capital appreciation. There was also an increase in the volume of commercial transactions and value, showing a trend of investors actually moving into the commercial market as well. The jump in development land sales last year also indicate that developers are land banking, and they are getting accustomed to higher per square foot selling prices of end products. Land transactions have increased. I think prices have reached record high, even the early transactions this year. And it actually took some time for developers to actually understand that the end market is also beginning to accept that higher selling prices per square foot is acceptable in the market. Now, in terms of pricing, it was actually a fantastic year. I mean, established locations like Bangsa and Taman Tun showed very, very strong increase in price for both condos and landed properties. Let me give you an idea. Single-story terrace house in Bangsa, we got some information since 2010, and until 2014, there was an increase of 85% over the 5 years. Now, I did not do the compounded version, but if you just take a straight average, it's 17% per annum growth. And the same in Taman Tun, double-story terrace grew 51% over 5 years, which is at about 10% per annum. In terms of condos, I took the sample again, Bangsa and Taman Tun. Menara Bangsa showed property prices increase by 60% since 2010, an average of 12% per annum. And in Taman Tun, Vista Kiara showed a growth of 48%, very similar to the landed properties. Basically, people are, it's just not enough properties in the market, no enough entry-level properties. People go to the next level, which are the condo segment. In terms of the rental market, it witnessed some upward movements. Some locations showed increase in choice locations. Obviously, I think some of the condo markets were a bit soft. Rentals did not move very much, but we did see some upward trend in landed properties and in some very, very good condominiums. The gross yields for landed property range between 2 to 4.5%, and condos between 3 to 7%. Now, when I gave the information about Taman Tun and Bangsa, I also wanted to set an idea in your mind that property is actually a medium to long-term play. As Mr. Ho Ketat said just now, right? If you're in it for flipping, there's a risk as well, right? Real estate is a long-term investment. Now, Selangor continued to be the most active in all states, churning out the biggest volume of transactions, strong economic growth, a massive spillover from KL, and in-migration continued for the strong demand in the residential subsector. The residential market in prominent locations, PJ, Shah Alam, Subang Jaya, showed 16%, at least 16% increase in terrace homes last year. And what we also saw is all the areas surrounding KL, bordering KL, with a single pointing out of Gombak, actually saw massive increase in property prices, even up to about 21% as a spillover from Kuala Lumpur set in. Condos also, I think everybody said, there's a huge supply of condos, but there's just not enough supply, right? And people at a certain price range. And what we've seen that the demand has actually pushed up prices, especially closer to learning institutions and all the MRT and LRT lines. Similar, Selangor also did show a good growth in the rental market as well. What we did see in the commercial market in Selangor, though, was it was very stable. But we think this is going to change as there's going to be spillover from the Kuala Lumpur commercial market as well. Penang, also another stable year. Good increase in transactions, marginal increase in values. Residential subsector, again, a very strong subsector. The prices registered a stable trend, but landed properties, because of the limited supply, really saw price improvements up to about 20% in Timur Laut and Barat Daya districts, right? And houses adjacent to the second bridge and established neighborhoods also experienced price hikes. In Seberang Perai, schemes like near all commercial areas, such as Banda Putra Bertam, also recorded capital gains due to various commercial attractions. The condos recorded significant growth in Penang, especially those in the industrial areas of Bayan Lepas, the Bukit Jambul commercial area, and sea-fronting condominiums in good locations. Rentals, again, were very stable in Penang. Johor was a rocking market last year, 19% growth in volume, whooping 47% growth in terms of value of transaction. The residential subsector accounted for 66.5% of the state's property market. Actually, in terms of a percentage, it's actually down from the previous year, but that's because of massive land sales taking place in the state. Actually, Johor is a magical state, right? It's a state where land can be magically created by the palace. I mean, one day, one of the panelists here has a beautiful waterfront property, beautiful, stunning. The next day, 5,000 acres in front of it. Magical. Anyway, prices of residential property remained firm with appreciation recorded across the board. The West Coast Highway, the East Dispersal Link became value creators for selected schemes nearby, and in JB City Centre as well. Prices of properties increased in very strong focal areas, good infrastructure, limited housing supply. For example, in Kulai Jaya, we saw prices and rent increase in double digits, mainly because of completions of shopping malls and better accessibility. The rental market was stable. Terrace houses had seen double-digit increase in rentals, and this was just due demand from all the infrastructure projects putting into place in migration into the state. Now, slight change for this year. Seeing that the trend of a lot of investors were moving into the commercial market last year, I'm going to cover a bit of the office market as well. Now, there was a positive trend in the office market. Now, I don't know whether any one of you all remembered one analyst saying that the KL office market is going to crash like the Dubai market, I felt very lonely because everybody was printed everywhere. But it didn't, right? There was an increase in overall occupancy from 82% to 84.9%. But that wasn't the interesting part of last year. The net take-up rate of office in the whole of Malaysia increased by 100%, from 4 million square feet to 8 million square feet last year, right? And all 14 states had secured more than 80% occupancy. There were 18 office building transactions of 1.1 billion. Notable ones include Menara PMI, the Shell building, PJD building, Menara Zurich in Johor, and Transocean building in Penang. The office rental was very stable. Petronas Twin Towers still leads the way in and around that area for high rentals in the market, as high as $15 for some small spaces. The occupancy in KL actually was very stable last year. Good, great take-up, above 3 million square feet take-up. Investment-grade buildings in good locations, close proximity to transit hubs, were very much in demand and fetched higher rents. Occupancies improved from 80% to 83% in KL last year. In terms of Selangor, again, rentals increased, but very marginal, but occupancies improved to a high 77% from 75% before. In Penang, which actually doesn't have such a big office market, I think a lot of people like the old shop houses. It's a different lifestyle, But even there, the office market actually did very well, and an occupancy of 82% from 80% the previous year. Johor has got really not very nice office buildings at the moment, but occupancies improved to about 70% last year. Another sector that I want to introduce, I know I love the hotel market, but what we have actually seen is I see an increasing demand in this sector from the retail market. Now, this was because of the introduction of hotel suites in the likes of the Rumah in KLCC, Angsana by Banyan Tree in Penang, and the exciting upcoming hotel suites in selected developments in Iskandar. So I do see retail investors taking up units already. I mean, we saw Rumah did well, Angsana's got a pretty good take-up, so it is a great investment-grade property, right? Now, the market did very well last year, especially within the 3 to 5-star market. The top performers were Putrajaya, Selangor, KL, Pulau Pinang, Johor, and Sabah. But actually, I'm very excited about the Johor hospitality market because over years, it had rubbish. I never used to stay in Johor hotels. I always ended up staying in Singapore and going to do work because it was horrible. But, over the past 2 years, we've seen some really exciting things happening. Last year, the Renaissance opened, the DoubleTree opened, which is really a truly refreshing change for what was in Johor, right? The 5-star hotels in Johor achieved higher average room rate of 75%. And a few hotels in Johor actually achieved 100% occupancy rate during peak, right? Actually, there were about 6 hotels that achieved 100%. But I think, it ranges from the Putri Pacific Hotel, Granada Hotel, Hyatt Regency, but I think point to note is actually Legoland Hotel, right, with its rates of about above 1,000 ringgit to 2,000 ringgit for family suites, was actually also now entertaining corporate travelers because there's lack of product or lack of hotel rooms in Johor, right? I just give you an idea of some room rates, which are higher than KL. Traders at 650 ringgit a night, and Renaissance at about 440 ringgit a night. So people say Johor hotel market horrible, cannot make money. Yeah, because your product's rubbish, right? So the new hotels, Traders, Renaissance, DoubleTree, Somerset, are actually doing very well in the market at the moment. Now, I think this is an exciting market to look at, especially the assets are professionally managed. They have good concepts and lifestyle offerings. For example, a deal that I came across from a managed property, it's about 800,000 ringgit to purchase one of these properties. They give you 6% guaranteed for 5 years, profit share for the next 5 years, and the best part is you get 14 days free stay in any of their hotels worldwide, right? So it's more than just, it's a lifestyle real estate investment, which I thought was quite cool, right? Now, this is always the tough part. As I said, sometimes I stand alone. As you can see. But investment bank analysts and other property consultants alike last year came up with statements like our office market will crash like Dubai, prices will drop, and markets will come to standstill. I said no, and neither of that happened last year. But this year, we all sang the same song and we were wrong. many analysts and myself included, made the mistake of saying that there will be a mad rush for residential properties due to the GST, but it did not happen. So sometimes not so lonely. So what's the outlook for 2015? Now, before I head to the outlook, I would just like to share some brief information on sentiments of the market in the first quarter this year. And this is just a carry-on of what Mr. Hoketat also said, it's sentiments. Firstly, the multiple claim of large external debt. I think Bank Negara came out very firmly. It upholds that Malaysia's external debt situation remains manageable and poses a small risk to the country. The reserve of short-term external debt ratio was at 1.1 times, above the recommended level of 1. Overall debt service ratio remains low at 18.2% of exports of goods and services. Majority of debt are medium to long term, with more than 40% in ringgit, and there's ample international reserves. Second issue, the reporters of the Age, I want a special coverage on this, is the issue of our household debt being very high, and Bank Negara immediately punished all of us. You cannot take loan. Follow responsible lending guideline. So thanks to NK Tong of Bukit Kiara Properties, who did a small analysis of household debt recently with the McKinsey report he got, and I asked permission to share it today. Basically, we as Malaysians have been misled that housing loans are a problem in our country. How, based on 2014 figures from Bank Negara and the McKinsey Global Institute report on global debt, our household home loan is only 54.2% of GDP. Instead of the current 87.9, Bank Negara just lumps everything in. And they proudly say 33% increase in car sales. We need cars or house. What loans should you be controlling, right? And according to McKinsey Global Report, elsewhere in the world, home loans, wow, so fast. I thought I was talking quite fast. I was trying to go. Okay, I talk faster. Okay. First bell, 3 minutes. Okay, hold on. Okay. So, but basically, McKinsey said everywhere in the world, housing loan is 74% of GDP. We are 54%. Why are real estate investors being punished? Right? I think it's time to introduce massive cooling measures for non-property loans. 2 years ago, I mentioned credit card was a problem, and that's what it adds up to. Right? As I said, people measure economic growth by car sales. Come on, lah. Anyway, for the Edge, if you could do a special feature on this and a strong message to Bank Negara on making loans more accessible for residential properties instead of non-property loans. And now for a lonely topic. Actually, the number one is the lonely number, Anyway, there's been a lot of talk of 1MDB and its impact onto our economy, especially in the early part of the year, which created a negative sentiment in the market. In fact, the massive impact, we're already feeling it, which is the ringgit, right? I want to travel overseas next week, going Sydney, cancel lah. Feel so poor, right? But anyway, the big question I think we need to understand is it going to cause a systemic collapse and also impact our sovereign rating, which for me is very, very important for long-term stability of the country and the real estate market. I think it was very comforting to hear from Tan Sri Zeti and Dato Sri Nazir Razak to say that it will not. To further quote Dato Sri Nazir Razak, quote, 1MDB is an isolated corporate governance and transparency issue, but it is a bit of an eyesore. Tiba-tiba dia sakit mata. Saya sakit hati. James Bond got the car and the girls. Tun got Siti Nurhaliza. One more minute. Oh, others got Paris Hilton, We got nothing. Sakit hati, boss. Sakit mata tak sakit. Sorry, I digress. The sentiment is now changing, more so with Malaysia's recently huge, successful 5.44 billion sukuk issuance despite 1MDB. Okay, I go very fast. Petrol price, I think this was my biggest fear. Thank God it stabilized. Petronas is doing a great job. As long as the prices don't move and Petronas is in control, I think we are in good nick. I don't think it's great. I think it's challenging, but I don't think it's going to create a massive problem. Now, all of the other above factors, coupled with the long holidays in the first quarter and the wait and see of GST, really saw a dampened sentiment in the first quarter with drop of transactions. With regards to GST, I will allow the panel thereafter to discuss this further after this. Okay, state of the market, very fast now. Huh? Global growth, very good. Strong emphasis in Asia Pacific. Credit Suisse did a survey. 70% want to move all their equities to Asia Pacific's ex-Japan. It's the first time in 4 years Asia Pacific's looking better than the US. We got strong GDP growth, 5.5%. ASEAN is at 5.3%. Still full employment. Anyone here unemployed? That means you're very rich. The ETPs are in place. I'm a strong believer of ETP. I've seen it happen. I've seen it do good for the country. I think it's really fantastic what's happening. It's a mixed start to 2015. Transactions dropped by 4%. Values dropped by 3% for the first quarter. But thereafter, the office market did very well, very strong take-up. Businesses are expanding. And you saw all the massive transactions that took on after the first quarter. The sale of Integra Tower, 1.1B, the sale of DoubleTree Hotel, MRCB buying land at record prices, and there are many more actually, but they only gave me 1 minute. All right, now, where do I start? Okay, all right, outlook. For us, we are neutral to positive on the market. We think the market will normalize in the second half of 2015 once it adapts to all new policies, including the 6% GST. Good global performance, Malaysia's positive GDP, low unemployment, progress of ETPs, the Greater KL Plan, multiplier effect of large infrastructure projects, improvements in public transport, MRT, LRT, high-speed rail, and proposed new highways will be the key catalyst to growth in the Malaysian property market. I think 2016 and 2017 will mark full recovery period of the property market with increased property transactions and take-up rates. For this year, the key focus will be secondary market. It will continue to be stable given the removal of DIBs and transparent pricing of primary properties. Properties will be resilient, transaction will drop, prices will go up or be very flat. I'm trying to be fast. Huh? I think landed properties in good locations, again, are going to see a very strong increase. Terrace houses in semi-Ds in gated environments are the hot sellers. High-end condominiums will stabilize, even though there is a perception of a huge supply coming in. We think smaller units in the high-end condominiums would be the flavor. However, we are seeing a strong return of big, bespoke, high-quality units in the suburbs coming in as more wealthy Malaysians opt for condo living. I do see a bit more action in the primary market in the coming months, as developers will ramp up launches to capture pent-up demand in the previous months. Affordable housing segment will be the main focus. Prices of property between 200 to 500,000 grew at about 12% last year. But because of Bank Negara's responsible lending guidelines, it punished the poor. Properties below 200,000 dropped a whooping 40%. Right? If you look at the overhang, a lot of properties below 200,000. But they can't get loans, right? Now, the market that is actually very active is the property prices above 500,000. Each year, 20% growth, 20% growth, 20% growth. We see properties near future MRT and LRT as hot sellers, so keep an eye out for the awesome Ho and Ho presentation after this. For Iskandar Malaysia, yes, I think what the analyst was saying, be careful, property price is going to drop. Yes, I think it looks frightening, especially the developments from the China developers. I will be very selective in my condo choices. I mean, I'm looking, it's a natural extension of Singapore, but my focus would be Puteri Harbour and Medini, especially with the tax incentive those locations offer. 15% personal tax. Some businesses, no tax. Right? So I like the landed property play in Medini. It's fantastic. There's lack of good supply. It's lack of good supply, and I think that is really going to be the main driver of the Johor market soon. For Penang, I think it'll be another stable year. Mainland will become more active, actually, as prices reach record high on the island. Both landed and condo will be my choice in Penang, but product and developer will be key. In the office market, I think MSC and green buildings with access to highways and public transport will be very hot because of the strong demand in the rental market, mainly in Greater KL and selected in Iskandar. Other things to look out for is my mantra of 3L. Nice lobby, awesome lift, comfortable lavatories. For the hospitality market, I think Iskandar will be the hottest as all the catalytic projects come into play. The demand from Pinewood for hotel place is already amazing. And we think Hotel Suites is a good class investment as well. It is managed for you with good best practices and minimal tenant issues. There's high demand for 4- and 5-star hotels. I also think Hotel Suites in KL and Penang are in good demand. For me, it's not Vesper Lind, it's real estate. Malaysian real estate investment, still worth the money, every penny of it. But of course, I'm not James Bond. Okay, and with that, I open the floor to questions. And for those who like a bit more private, my mobile number is right at the bottom of the slide if you'd like to be in touch.